Did you know that you could have more than one fire policy on your house? We'll be talking about that special attribute of fire insurance as well as other important topics about it today. What is up? You are watching Tito Talks non-life insurance discussions with your favorite Tito Miguel, who always loves making non-life insurance topics easier to understand for both agents and clients. Magandang araw po sa inyong lahat. It is a rainy Sunday afternoon over here in Marikina, and we are very happy to have you guys today for our first fire insurance video. Now, as you all know, we're trying to build a library of videos for topics for agents and customers who'd like to learn more about fire insurance. So this is going to be the first in a series of videos that will tackle various topics and various areas of interest when it comes to fire insurance. That's why we've entitled this the three most important things you have to remember about fire insurance as a precursor to the rest of the topics that we've got to talk about. And we do have a lot to talk about. I hope you watch until the end of the video, wherein we also talk about our word for the day. Also, don't forget to like and subscribe the video. I'm serious. Please like and subscribe, or else I will tell your mama you lost her Tupperware. Mhm. Now, with that being said, let's get on to the first thing you have to remember about fire insurance. One of the most basic and most fundamental things you have to understand about a fire insurance is that unlike a motor car policy, a fire insurance is treated as an open policy. And for those of you that weren't aware, motor car policies are considered as valued policies. Now, the main difference between a valued policy and an open policy, it usually falls into the way that the policy evaluates things. And I do believe we need some more context for this. When you're talking about a motor car, it's really, really easy to determine the price of a particular motor car, i.e., if you already know who made it, the manufacturer, what year it was made, you probably have a good standing or you probably have a good grasp of what the fair market value of that car is. However, it's different with properties. As you all know, properties will have different values, even if they look exactly the same. You could have identical looking houses, but some houses could have more features, more appliances, more rooms, more swimming pools, bigger bathrooms than the other house. So it is really difficult to determine a fair market value for a standard type of house. And this is what makes fire policies open types of policies. With motor cars, the fair market value is already dictated by the market. On the other hand, what happens in open policies is that the insured and the insurer agree on a maximum cover of the house, which is not reflective of the value of the house. It's not an indication of the value of the house. So even if, let's say, your house is insured for 5 million pesos, that doesn't mean your house is worth 500 pesos. It just means your house is insured for 5 million pesos. The actual value of your house, which the insurance has no idea about in the first place, is knowledge owned by the owner of the house, the person who operates the whole thing, the person who gets the insurance in the first place. With that being said, whenever you, an insurance agent, trying to close a deal for property insurance, the task of evaluating the house, luckily, does not fall on the agent. It falls on the insured. And we talked a little bit about that during our other property video, wherein you could get a 500 peso premium on a house insurance. If you're interested in getting house insurance for that cheap, take a look at this video and talk to your Tito, wherein we talked about the average clause in that particular lesson. So that's what an open policy is. You and the insured agree on a maximum amount of coverage for the house. That means you cannot dictate, or the agent does not dictate the amount of coverage they're going to give. Rather, the client approaches them with the amount of insurance that they would like to have for their house, which actually leads into an interesting discussion about overinsurance and underinsurance, to which don't worry, we're gonna make a video on that one too. Hinay-hinay lang. Isang tao lang po si Tito. Now that's point number one. Let's go to point number two. Point number two is really interesting. Is It's the fact that fire policies operate on a what do you call this, on a reduction clause, if you may. Now, what does this reduction clause entail? Well, this clause dictates that a fire insurance policy is, well, it's on a diminishing balance basis. What we mean when we say a diminishing balance basis, it's the same thing with your personal accident policies in terms of disability benefits. If you haven't seen our discussion on personal accident insurance policies and how the disability benefit works, you can check this video right here as well. Now, with fire insurance, though, you start off the year with a full sum insured, which covers the maximum agreed amount of the house, as we discussed earlier. However, every time you file a claim, whether that be broken areas of the house, certain areas of the house got burned down, certain elements inside the house have been stolen, every time you file a claim and every time the insurance company pays for the claims, it depletes the sum insured. So, in a way, it's like cell phone load. And I think I used that analogy in the past video as well. Pag tawag ka ng tawag, pag text ka ng text, nababawasan ang load. So you keep on claiming throughout the whole year up until the year ends, or when there's no more sum insured left to cover the losses that take place. Does that mean pag naubos yung insurance ko, hindi na ako pwede mag-claim? Most likely. Pwede ba ako mag-load ulit ng insurance? Of course. And this is known as reinstatement, wherein you have to pay a prorated amount of premium to have the value or to have the full sum insured of the policy restored in the policy so that for the rest of the year, you still experience the full amount of coverage. Just in case in the middle of the year, even after several claims beforehand, you experience a total loss, wherein the whole house gets burned down or the whole house becomes destroyed and it needs to be paid for by the insurance company. Isn't that interesting? Now, our final point for today, this one's really, really interesting because it's got something to do with multiple insurers, and it's the fact that you can have multiple insurers on the same property. Now, you may not see this most of the time with privately owned residential houses, as they only go with one insurer for the meantime. But if you're talking about large buildings, large condominiums, large malls, there is a big chance that these owners or the owners or proprietors of these particular buildings have insurance policies or have the buildings covered by multiple insurers. That's possible. That's absolutely possible under the contribution principle. Yes, you can have more than one insurer insuring the same property, but that does not mean that you're going to get the maximum benefit from all of these insurers and their policies in the event of a total loss. No, 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 that's not how that works. Based on our contribution clause and the principle of contribution itself, each insurer each insurer shares a particular proportion of the whole property. Now, what does that mean? Let's say, for instance, you've got a property that's worth 1 million pesos because Tito likes 1 million peso examples because they're so easy to compute for. Now, let's say you've got a one property that's worth 1 million pesos and you've decided to go with two insurers for this particular property. Since it's the customer that dictates how much insurance they would like to get from the insurance company, they can decide how much of the property shall the insurance cover. So let's say the property is estimated at the value at 1 million. And let's say your customer chooses to go with insurer A for 250,000 pesos. So insurer A is covering the property at 250,000 pesos. And then your insurer discovered a really, really charming, really, really fluent, and really, really handsome agent whom he calls Tito, and he bought the rest of his coverage from Tito. So therefore, the first insurer covers the property at 250,000 pesos. The insurer that Tito represents will cover the rest of the property for the remaining 750 pesos. So the full building is covered. Hindi po pwedeng mag-overlap ang coverages ng dalawang insurance policy. They have to take care of each of their own specific portions in value of the property in question. Isn't that interesting? Now, I do understand. I also promised you guys a word for the day, and I do plan to make a video about this because this one's closely related to insurance. We're going to tackle the word proximate. Don't say it like that. When we talk about the word proximate, this refers to the most direct reason for something happening. When we say the term proximate, this means, or this is an adjective that means it is the most direct, influential reason for something to happen, and therefore we have a principle in insurance known as proximate cause. Don't worry, we're gonna pronounce it properly this time. Say this with your Tito. Proximate. One more time for Tito. Proximate. Have you ever mispronounced the word proximate before? I'm pretty sure you haven't, but let me know in the comment section. Give Tito a shout out. Let me know what you're thinking. Let me know what you'd like for me to talk about as we close today's session. And once again, thank you so much for attending today. Please look forward to our other property insurance lessons. We're gonna issue out a lot more in the following days to come. And don't forget our English Mondays as well. Lunes po bukas, mag-release po ulit si Tito. And don't forget, Tito always says, enjoy the rest of your day.